Morning, everybody. Marco, you are a beast. Following you since 6 years and then seeing what you have created also downstairs, how it has grown, I think you definitely do not lack ambition. So congrats for this great achievement. Historically, I've always tried to look a little bit at the ecosystem level, because the ecosystem at the end decides whether we get some tailwind or headwind. And I would like to start to recap some of these assumptions that I've done and see where we have come out. So in 2011, on the very high level, I think tech is a great asset class. And you can see there that historically over 20 years, there's only asset class which is scarcity, like oil and gas, which has performed in a better way. That was one hypothesis. So the other hypothesis was that I think we are on the way to, or I thought we were on the way to creating a successful ecosystem, which I identified like you have identity centers, then you have to accelerate faster, and you have to have a financial environment that works nicely. So which at that time you could see on this chart. So where have we come from there? I think it even has improved. So tech is still a fantastic asset class, and nobody should miss it out. And you see this is a public data, but something has changed. So in real, the asset class is even way better, because when you looked at the 90s or even at the 80s, the average IPO price of the big companies like Cisco, Amazon, and Microsoft were like 200, 400, or 700 million. And as you know, they've all grown really, really substantially, meaning that all this raise in market cap was available for public investors. So now, today, this has totally changed. A lot of these IPOs happen at way higher valuations, meaning you deprive public investors from that part of the performance, and you have to go to the private sector. So first, asset class, really important. Secondly, if you try to take only advantage on the public markets, you fall short. You have to go into the private markets. So the next hypothesis was, do we have identity centers? The hypothesis at that time was that you had like 3,000, 5,000 people per quarter coming to Berlin from other regions, and this has continued to develop like this. So Berlin, with a diversity of languages and a very cheap environment to build a company, has clearly developed into a center like Stockholm and London as well. So acceleration, we have seen a lot of companies that come from nowhere to a really big scale, and their advantage of social networks, the advantage of the press that better covers it, the advantage of the operating system that give you access to the entire world. So on the financing side, we can also see that a lot of money has gone into that market. Meaning before we were always complaining that there was not enough money. I think it has strongly accelerated over the last quarters, which you can see here in the venture capital volume that has been raised and employed. Same for the IPO markets, a lot of money in the IPO market. So we think we start to get there, that we have a functional capital markets in Europe, but it's still some way to go. On the comparison between other geos, it's still slow and it's still growing only a little bit, but I think we have grown 3 times versus 1.4 times in the US in overall funding of e-commerce, of internet companies. But there's one caveat to it, and this caveat is that all these means that get invested are still largely coming from the US, which is nice that we have it, but which also implies that with US money being invested, the center of gravity, meaning the decisions, sometimes even the legal incorporation, place of incorporation shifts to the US, so we structurally lose some of these companies. So looking forward, what does it need now? So we checked, we have identity centers, we have the funding available. The only thing that distinguishes us from the big US ones are that we still not do genuine companies. So we rather copied more models, which I think was a perfect answer to the prerequisites we had in the ecosystem. So that we couldn't have done it in a different way, but now since the parameters have changed, I think there's a chance we can be more ambitious, as Peter Lynch said. So, and there are some great areas where real innovation can happen. So if you look at the Horizon portfolio from Solina Chow, she invests in artificial food like Hampton Creek or Modern Meadow. These are really fantastical models. And I think we have enough intellectual capacity also in these adjacent fields, beside tech, to really develop genuine ideas. The other thing, here is a Larry Page statement, which was from the Financial Times. A real smart group of committed people with 50 million can make a big, big difference. So what does it mean? Committed people. And I think there is the ambition statement. So the ambition statement, and that is my key point, I'd like to recalibrate a little bit. So historically, I sometimes felt that people want to be self-employed, get into a startup because you have this very quick get-rich stories. And I think this very quick get-rich doesn't work. It doesn't work because you will never build something big. You're just a trader and not an entrepreneurial builder. So, and in order to show this kind of DNA that it requires, I gave you some examples. I will give you some examples of people and entrepreneurs in Europe, what fantastic history we have, what a fantastic vision we had, and with fantastic power to thrive. So let's see. First one, like someone like Marcel Dassault. He started very early as a 20-year-old kid and said, okay, I want to do aviation. Aviation is the coolest thing. He developed his company for 30 years, then was war, he was in prison, got out and started over again and still worked 30 years to build it. Now has 4.5 billion revenue, 500 million profit, and 30% market share in private aviation, and producing the war planes for France. Same you have with Porsche. So you have an initial idea, and it took ages to build something that has a very, very high visibility. So we have Nicolas Hayek, who at a late stage started to help or turn around the entire watch industry in Switzerland. And that is my famous example. So whenever you think about ambition and of persistence, the biography of Mr. Krupp. Mr. Krupp decided that the steel he wanted, he wanted to build them. And so he founded his company, his son took over, and that was in 1811 to 1815. And this guy was from a rich family, and he was so convinced of that superior steel that he ran an unprofitable company from 1811 till 1859. So it was a real conviction, it was a real vision. And after that, finally the point came, and then he got tailwind and finally succeeded. Same with IKEA. It took 17 years, or 15 years, from having a mail order business to the first IKEA shop. So it is about long way and hard stuff. So the other thing is we have to shift a little bit more to technology-focused businesses. So historically it was that we didn't have a choice in the ecosystem, but now the confidence of technology people needs to be stronger, because like all big companies, or a lot of them, like 80 or 90%, have at least one technical co-founder. The other thing is patience. So from the entrepreneurs, but as well from investors. It takes time. It's not a short journey, it takes time. You will have at least, if you want to build something substantial, there's no way it works below 7 years, something, in order to build an infrastructure. And the other thing, it needs more money, but we are here. So here I show you how much money the big companies consumed. So there was a big mystery to me, how people in the last 5 years said, okay, I build a big e-commerce company, it's a 5-10 billion market, and I'm investing 5 million to get there. So this definitely doesn't happen. So you really have to employ a lot of money, and that means for us at Lakestar that from the very beginning you have to give way more credibility to the entrepreneurs. You have to give them a higher valuation. You have to give more money in that he has the leadway to also fulfill these things and not get diluted down when you need a lot of money. Median funding size, 514 million US dollar in order to get to those kind of valuations. Let's see. We are very committed. I've always had a focus on these companies. Historically, there is this list of unicorns, and I was lucky enough, or we were lucky enough to be involved in like 25% of them, which probably is the highest quota among VCs. And so we derive several learnings out of that. So I think that we have to buy into visions as a VC and not into historical numbers. Historical numbers is ridiculous. It's just to calm your gut feel because you're not bold, you don't have guts enough to make a decision. Because it's not about historical numbers, it's about the vision of the product. Second thing is, we have lended money. Some people have own money that they invest, but mostly the industry has third-party money. So that shouldn't give us the attitude that we are the stars. At the end, the entrepreneur is the star. He has to go for that long vision. He has a one-trick pony. So and in terms of dealing with entrepreneurs, it's very important that we give them the feeling. As said already, we are not valuation shy. Rather, for a good guy, get him more so he can work longer. And in order to also go a longer way with the companies that we are involved in, we structurally prepared ourselves to do in total 50 million for one company. So historical unicorns we have been involved in, and I think like our current portfolio has like Algomi, Teralytics, and Harry's that will also get into the unicorn sphere. And that's it. Thank you very much.